8:33 a.m. Pacific Standard Time, 4/3 of 2016. We have a weekly chart that when we had started January, we had quoted the world that we were going to go straight down, and we did. And on this weekly chart, in the very first 6 weeks, as we came down and we tested that 1810 level and slightly below it. One of the things that I really want to emphasize on as far as the S&P and high frequency trading algorithms, um, the new things that come to the market for 2016. Basically, what we have done is what we call a complete V shape. This green line below here, when we had that big correction, and for the last, 72 months or so, we never ever got close to testing this 200-week simple moving average. And we have gone parabolically back up. And the thing about it is that these markets have both gone, and the pendulum is here, the swing is here, and the tops over here back in the year 2015 could not take out resistance. What I am taking into consideration is that there's a couple of key factors that the retail people look at. Number one, you have what we call a moving average convergence divergence called an MCD. This is what the public looked at. This week over here, the prior week, that was still minus 9.95. Right now, we're very close to getting a weekly buy signal. So far, for the first quarter, the first 90 days, is that when we went into that weekly sell signal, it was there big time. We are on the verge right now of popping a weekly buy signal, which is, very significant in what these markets are going to do. We will say, though, that now is the best time to do what? It's the best time to start looking at some bear funds, what that this whole move is going to take. What I will say is that the next reversal that we get is going to be very significant. Once again, we're going into an earnings season that's starting here in April. And basically, we're above the 50-week. That's the white line. You got your 100-week as a beige line. You've got your blue line here. That's a 10-week moving average. So we're hitting that wall of resistance. We've gone both ways. The earnings season, as I have quoted already in 2015, when we went through the January quarter of year 2016, I simply have laid out the fact that there is going to be a contraction in earnings. That means that the multiple on the S&P 500 cash earnings are not going to be sustainable in this particular format in the release of the quarterly results that are starting here in April. So, listen, mathematically, we have swung it and we did hard. Um, is there going to be a bear market this year? Absolutely. We will go back in because stocks were well off their highs of 20 to 30%, and that the leadership stocks had came back up. However, those numbers will not be sustainable at all. So we're above all the key weekly moving averages, and this was an extreme bull run. So the bear and the bull have been fighting it out, and they're about even right now. And we're also going to do one other thing. Here we have is a daily chart on the S&P 500 index versus the weekly we just showed. You can see where that bear was in total control. And we were well off the highs, 20 to 30% in equities. Certain different equities overall on the broader S&P 500 were in bear market territory. They came back in with a high frequency algorithmic program, and it was done by a supercomputer. So all of the short interest that was combined in the S&P, they basically walked this up against all the hedge fund managers that were short. And basically, it's a complete V-shaped bottom. And one of the things that we're going to be clear about right up here up front, there's going to be a major reversal. This is the top of the 2015, and exactly right here, right there, this trend line right here, is where that big move started on this daily chart. And right at the moment, we're right up here. The bear market ETFs are going to get a great move again, as it did starting out the new year. When we start looking back at 2015, we're going to take a look at where this market had a significant support level. And we had that first really nice correction that went straight down over here. This diagonal trend line was the major area of resistance. We popped above it, we sold down, and we've had a total value as far as what the S&P cash earnings are worth. This movement right here, right now, is not sustainable. And when we were down here in the deeply oversold market on the S&P, we had called the bottom, and there was a bottom because we were what? We were oversold. Now, just the opposite is we're extremely overbought on the S&P 500. So one of the things that we're going to be looking at, and we'll update through next week, are the ETFs that are what we call 3X bears. But the bull has totally come up. The 200 simple day moving average is that green line. And I hate to tell you, it's still not flat. You still have a curve down. The baseline, which is right here, that is also descending. And we're already overbought, extremely overbought within this cycle of both the bear and the bull. So I'm going to end it. I'm calling for another reversal. Let's get real. We called that one. We got earnings out. We'll be a stock picker using our turbooptiontrading.com format that we have taken upon ourselves to release a new option trading website. I'm calling for a reversal. I'm calling that this reversal from where we're at 2072, we're going to come right back down here to 2010. The serious breakouts that happened over here and the support levels are going to be strong, and it's going to be a massive correction again. So I'm going to conclude it. There's no more to add. Stay tuned. Follow up in the earnings season. Daily moving averages, the 10-day, the 20-day. Here's the 100-day, the green line. The white line is a 100-day baseline here. And way back down here where that white line is, that's where the markets broke through that 1950 area. And then we had a 1975 area. And then ultimately that 2050 where it also had broke up above. And once again, put your seatbelt on, major correction, major earnings, major volatility. And I'm going to tell you people right now, when I say there's going to be a correction, you can bet on it. And we already have all the live videos here. So let's get involved right now with the daily chart on the S&P and a correction. No one's going to get out of this next leg down.